Hi, this is Jared Snider with Exencial Wealth Advisors. Hope you're having a great day, and I just wanted to share a little bit of insight into some questions that I'm getting from my clients. A lot of my clients have asked me recently over the last few weeks, really since the start of 2021, is now a good time to invest in stocks? So I thought maybe we could unpack that and talk about that a little bit. First off, that's not an uncommon question really at any time in the market, whether we're hitting lows in the market like we were back in March of 2020, or whenever we're hitting new highs in the market like we have over recent weeks. People want to know, when is the right time to put money to work? And I think foundationally, it's important to think about the purpose for the dollars. Why are we investing in the first place? What are we going to be using these dollars for? What's our time horizon for using these dollars? Are we going to need any of these investments to cover an expense anytime soon? Those are some important things to think about when we're thinking about, is now a good time to invest? So I think that those fundamental uses of the dollars really are the first thing to be thinking about. But typically whenever people are asking, is now a good time to invest, really kind of the hidden question behind the question is, are markets about to fall? Because no one likes being the person that invests in the stock market and then the market immediately has a 5%, 10%, 20% or more pullback in the market. No one likes seeing that happen. I think that something that is important to remember is the time that those dollars are invested in the market has a much, much bigger impact on how those investments actually turn out than the timing of when we get those dollars put to work. So time in the market, just generally speaking, is going to be more important than timing the market. Because whenever you're consistently investing over time, you're going to be seeing good results on that. Because the stock market is positive about 2/3 of all months, about 2/3 of all years. Most of the time we're going to be seeing growth in the market. And even if you don't get your timing perfect, let's say you put money to work in the market and then markets immediately have a 10% pullback. Are you happy about that? Obviously no, that's not what anybody wants to have happen. But whenever your dollars are invested for the long haul, whenever you get 3 years, 5 years down the road, certainly longer periods than that even, the longer that you get away from those first initial days of putting those dollars to work, that initial market move up that you're excited about, or that initial move down that you're not excited about, is really going to get smoothed out by the returns that happen in the market over the long haul. So some of that may sound theoretical, and you may be sitting there saying, okay, well, what does that mean for me now? What do I actually do? How do I go about getting invested in today's stock market? You have a few choices. You can certainly identify the areas of the market that you want to invest in, and you can just go all in, and for whatever dollars you have to put to work in stocks, you can go buy those stocks now. History of the market tells us that that's actually not a bad idea, that even though we've hit high points in the market, that fact that we've hit new highs in the stock market really isn't a great indicator of what's going to happen in the future. So putting money to work now, the odds say, since markets are up about 2/3 of all times, the odds tell us that now is probably the best prices that we're going to get. However, if you'd like to hedge some of that near-term risk of a market pullback, especially just given everything that's happened in 2020, and as we're moving quickly through 2021, it's hard to believe that we're as far into 2021 as we already are. But if you're saying, I just want to hedge some of that risk, I want to put money to work, I don't want it sitting in cash and getting virtually no return, but I want to kind of hedge my bets a little bit, there are some tools in the toolkit you can use to help manage that. One, probably the most simple thing that you can do is to dollar cost average your investments. And so let's say you have $100,000 to invest. Perhaps you put $25,000, $30,000, $50,000 to work now. You invest that now. And then the remaining leftover amount of cash that you have, you just do that gradually over the next several months. And then if we see a market pullback, go ahead and accelerate those buys and buy more in the event of a pullback. That helps you to get some of the money put to work now, because again, these may be the best prices that we end up having over the next few months. But it's kind of accounting for some of that near-term risk, timing risk, if you will, of the market having a little bit of a correction. Another choice that you can use, another tool that you can use is hedging, market hedging. And so you can use some options in your portfolio, some options trading to get cash put to work. And we've talked about this a little bit before on a previous video, so you might check that out. I give a lot more detail in one of our previous discussions around put selling. But whenever you're selling puts in the market, basically you're getting paid to put a market limit order in. So you're just telling the market, I'm willing to buy stocks, but I'm not willing to buy until the stocks fall 10 or 15%. And for you being willing to do that, another investor in the marketplace is willing to pay you a cash payment up front. Basically, it's like an insurance contract. You're the insurance company, someone else is buying insurance from you, and you're telling them, hey, if the market falls 10 or 15%, don't worry, I've got you covered. I'll buy your stocks off your hands. You just have to pay me cash up front. And the yields right now on that type of strategy are actually attractive, kind of in the 5%, 6%, 7% range. So those two ideas can be good ways of getting cash put to work, but I wouldn't discount getting money invested now. Because again, nobody knows the future. No one has a crystal ball. I don't have a crystal ball sitting on my table today to tell me what the future holds. So time in the market is more important than timing the market. But hopefully that's helpful for you. I think there are a lot of great ways to get cash put to work, and there are some really good areas of the market that certainly merit investment today. So if that's something you're contemplating, don't hesitate to reach out to me and my team, and we're glad to help. Thanks. Hope you have a wonderful day.